Good afternoon, ladies and gentlemen, and welcome to the On the Market PLC interim results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab that's situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during this meeting. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Clive Beattie, CFO, and Jason Tebb, CEO from On the Market. Good afternoon.
Good afternoon, Mark, and thanks so much for the introduction. And good afternoon, ladies and gentlemen. Thanks very much for your time, either for those who are visiting and seeing this for the first time or for those who are returning, having seen previous presentations as well. But we're delighted to present to you this evening our On the Market PLC half-year results up to 31st of July, which saw strong growth and significant strategic progress, which continuing to drive our performance ahead of expectations. My name is Jason Tebb, and I'm accompanied by Clive Beattie today. So what are On the Market? We are a leading UK property search portal. We are majority owned by estate and letting agents, and put simply, we introduce estate agents and letting agents and house builders stock, so they're available properties, to consumers. So we are a subscription-based platform where estate agents, letting agents and house builders list their available properties for sale and for rent, and then we attract consumers to the site who visit the site looking for those properties to buy or to rent, and we interact the two. And it's a very straightforward business model, and there's significant opportunity within it. There's estimated to be over 18,000 estate agency branches in the UK, and the transaction numbers speak for themselves. You can see on the screen. Of course, we are in the middle of what is one of the busiest sales markets of all time, certainly since records began in 2005. But even after that, we usually expect to see just over 1 million residential sales transactions every year, and somewhere between 2 and 2.5 million residential lettings every year. And as I indicated earlier, the model is very, very simple. It is subscription based. Our estate agents and house builders pay a subscription to list all of their properties on the site, and we generate some additional revenue, particularly from house builders, because we have some sort of campaign revenue streams as well, via email campaigns and other associated marketing strategies, and there's some other ancillary revenue as well. What we've seen over this first half year is a really positive outcome, both operationally and financially. We're obviously helped by some significant tailwinds in terms of the UK property market, and we've made some real progress in building what we're calling a differentiated tech-enabled property business. We've had a growth in paying agent branches and agents exclusive to On the Market, and this suggests that the changes we're making to the business are being well received by our customers. And we're in a strong cash position, which puts us in a perfect position to be able to support our growth in the future. I'll draw your attention to a couple of points on this slide, which shows our growth and our scale over the last few years. Those of you who followed us for some time will remember that in Q4 last year, we went through a process of actively removing those customers from the site who weren't paying anything at all. So there was some extended free of charge contracts, and we removed those agents from the site who weren't paying anything at all. And instead, we went on a very aggressive onboarding strategy, bringing new agents to the site and also agents back to the site who've been with us previously, but on much smaller periods of time from a free, and then converting to a paying contract. And you can see from this slide here that our advertisers period on period has remained broadly flat, but the most significant movement forward, particularly in the last few months, has been the number of agency branches who are underpaying contracts. That's increased from 68% in 20 to 91% in that period 21. And this is all in the backdrop of a growing brand and consumer awareness in terms of website traffic and visits and leads generated. So I think we've established ourselves now as one of the three major UK property portals. We're no longer a challenger. We are a business in our own right that is continuing to grow and develop, both in terms of consumer awareness and in terms of lead numbers that are generated for our agent members. We have the fundamental support of agents because of our ownership structure, and we still operate within a very, very competitive price point compared to the other players in the market. Our business, therefore, the core business, the listings business, is both sustainable, profitable, and cash generative. And we have a very clear strategy of innovation, which helps us to adapt to our changing consumers' behaviors, but most importantly of all, differentiate our offering for both our customers, which are agents and house builders, and our consumers who visit the site. So I'm now going to hand over to Clive, who will go through some financial and operational highlights. Good evening, Clive.
Thank you, Jason. Good evening, everyone. So as Jason says, I'll just take you through some of the key highlights for our 6-month period to 31st of July. You can see here our group revenue was at 14.9 million, up 46% period on period. That partly reflects that in the prior period in 2020, we supported our advertiser customers, agents and home builders, by giving them discounts during what was a fully locked down market at that time. But even adjusting back for that 1.8 million of discounts, our growth is still 24%. So very good growth, and really reflecting what Jason was talking about, the fact that we are moving agents onto paying contracts and away from the initial introductory free contracts. That feeds through into growth in what is a key metric for us, ARPA. That stands for average revenue per advertiser. It's a figure given on a monthly basis. So effectively, it's the revenues per month divided by the advertisers per month, and that gives that fee. And you can see that's up strongly, up 52% to £188. And indeed, within that, the agency ARPA in particular, up 60% to £207, reflecting that change from the free contracts. We're quite an operationally leveraged business, so that has fed through nicely, that increase in sales, into a big increase in our adjusted operating profit, up 163% to 2.1 million, and another period of profitability for us. So we've been profitable since COVID broke out, our last 3 half years, the full year, the 2 half years of last year, and this half year period, all profitable periods for us. So clearly that's encouraging. Briefly mention new homes. New homes is a newer segment for us. We've been advertising for agent customers for many more years. New homes started in September 2019, but still a good area of growth. We're seeing growth in advertisers and growth in ARPA, and you can see over doubling of revenues from our new homes segment to 1.1 million in the 6 months. And then finally, touching on cash, Jason mentioned we're in a strong position. The 6 months we generated operating cash flow of 2.6 million, and we finished the year on 9.9 million. So we have no borrowings. So again, a good, strong cash position from which to continue to grow the business. If I then turn to some of the consumer and operational metrics, on the left-hand side, we deal with advertisers. Actually, period on period, our total advertisers were down, and again, down to that reason of some of the people on free contracts. When we asked them to either delist or move to paying, clearly some did leave us. But actually, encouragingly, since the end of January, on our full year, in the 6 months we've just had, we are actually growing those numbers again. So agency advertisers up 5% since 31st of January. New homes have continued to grow, up 6% since 31st of January. So both of those are encouraging for us. And as Jason's already mentioned, the key is actually who's paying us. And the paying contracts are still up further from the end of January, a further 3%. So the agent branch is under paying contracts, almost 10,200. If we look at the consumer metrics, obviously very important to get people to our site to generate leads to our agents. Leads are, if someone wants to buy or rent a property, they may call or email the agent that they see the property listed through that agent on our site. So that's really what the advertisers pay us to produce. So we need both traffic, but we need traffic of serious property seekers, people who are actually looking to move at this point in time to make offers on properties. You can see from our visits figure, up 36%, again up from a period that was a little bit low because of COVID, but again, encouragingly, we're up half year on half year against the second half of last year, still increases in our visits, and obviously that was a very busy period once residential property markets reopened. Leads per advertiser again up strongly and again up on the second half of last year, so all very encouraging. The final figure which we thought it's worth just sharing is agents who are exclusively using On The Market as their portal, so they don't list their properties on any other portal. Some of you, if you're familiar with us, know we have something called New and Exclusive. And new and exclusive is where agents choose to put the new instructions they have on our portal in advance of other portals, at least 24 hours or more. And that helps us because obviously consumers, particularly in markets now where properties go under offer very quickly, they want to come to our site because they will see the property there before they see it elsewhere. And clearly they want to, if it's the property that they're interested in, they want to get first in the queue. Actually, even better than that in some ways is the exclusive agents with us, because their stock is only on our portal and you can only see it by coming to On The Market out of the portals. And clearly for consumers, as that number grows, and that's up from around 700 in March, so up quite substantially in the last 3 or 4 months, then there will be an increasing number of properties that are only on our portal. And as a consumer, clearly you'd want to come and see those so you don't miss out if that's the one that actually is the house for you. So that's important for us, and I think demonstrates the viability of our portal now for an agent. The fact that we have these agents who are only listing with us, are winning vendor instructions and then marketing through us those instructions and selling properties to their clients demonstrates the viability of our offering. If I then turn on this slide, I just look a little bit more about the revenues, and in particular the point here to make is you can see the growing, what is an orangish bar on the top of the blue. So most of our revenues are still coming from estate agents, but increasingly new homes is becoming more material within that. And that's a trend we would think would be likely to continue as we go forward. For 2 reasons. Firstly, we still see further growth in new home developments. We've got just over 2,000 listed at the end of the period, but we see that being able to continue to grow. There's probably 3, depending on the exact time, maybe 3,000 to 3,500 developments being marketed at a point in time. So room for market share growth. And also, if you look at the ARPA at the bottom left of the chart, you can see our agency ARPA at £207 currently. That is still lower than our normal tariff. And that is because we still have, although we have far less people on free contracts, we do have agents on discounted rates still. And so we would expect that ARPA to increase potentially up towards 300 as those discounts unwind, as we deliver more value and seek to get people onto full tariff contracts. In time, the new homes ARPA should really be able to be similar to the agency ARPA. And so again, potential for growth there. It's just a newer business for us, and so we're not as far along the path of converting those through to full tariff and higher charges. If I then turn to our revenue growth, this slide really I'm just trying to show the impact of those discounts we gave in last year. So we gave in total 2.6 million of discounts, 1.8 in the first half, 0.8 in the second. If you actually add those back into the 2020 halves, you can actually see that we have been growing in a reasonably consistent manner. It's just the actual reported figures have been distorted by the actions we took during COVID. But actually, I think the underlying trend is healthy, and in due course we should see that continue with the plans we've got in place, particularly around changing those discounted rates towards full tariff contracts. Next slide is on cash. We've touched on this. We're in a strong position. You can see here that actually since COVID started, we've been generating circa 2.5 million of operating cash each 6-month period, each half, and the balance has stayed very healthy. And that balance actually is after we've paid around 1.8 million in cash for an acquisition of a business called Glanty. Jason will come back to that. But also we repaid all of our furlough loans. We received £450,000 of loans for furlough in 2020. We repaid all of those in June of this year. So that July month-end balance of 9.9 million is after all of those have been paid out. So very financially stable, no borrowings, as I said, a good position for future growth. And then finally, our outlook. What we were pleased with in the first half of this year is actually it enabled us to upgrade our expectations for the full year. We've upgraded a slight outperformance in revenues, but because of the operational leverage in the business, a substantial outperformance on our previous expectations of adjusted operating profit. So both those things are obviously encouraging for us to be able to revise our guidance in that way. And as I say, the second half trading has been in line with that, and we're very encouraged so far. And with that, I'm going to hand back to Jason to talk through some of our other initiatives.
Great, thank you very much, Clive. Thank you. So if we move onwards, let me remind those who are joining us for the first time of our vision and our new strategy as a business, and then also what we've done operationally and commercially along those lines over the course of the last few months. So for those of you who are seeing this for the first time, we we are developing our strategy to become a property technology business, providing services for agents and house builders, but consumers as well, featuring what we are calling best-in-class products and platforms across the entire property marketplace. And what does that mean? That means that as our business grows, we are expanding our business to become more than simply just a portal. The portal will always remain front and center of everything we do, because as you've just seen from the previous slides, that business is sustainable, it's cash generative, and it's also profitable. But we're now adding some other pillars to our armory, and that is really around 4 core pillars of growth in the future, which are portal, software, data and market intelligence, and communications and marketing tools. And we believe as a management team that these foundations that we've been working so hard to put in place over the last 6-7 months are now in place, and we're perfectly geared, ready for the next stage of our growth. And why have we done that? Because we listened to our customers. And as an ex-agent myself, I was in the estate agency business for over 18 years, and I saw it firsthand. I was a customer of all of the major portals, and I saw that as they grew in scale and size, they became increasingly removed from the customers that were put in there in the first place. So when I started my tenure in this business, the first thing we did is start to engage with our customers. And many of the strategies that we've developed over the course of the last few months have been on the back of this customer engagement, really listening to them, understanding what they want and need from a portal, and how we can help to accelerate their own growth in their own business. And it was really encouraging that over those town hall sessions, I've spoken to nearly 1,000 agents over the months about exactly what they want and need. And it was really good to get feedback from them saying how much we are engaging with them and how much they appreciate that. But what was even more interesting for me is that some agents who, for whatever reason, hadn't been members of On the Market in the past are now members, or agents who have joined the portal, then left, have now come back. And I found that particularly encouraging and really signifies that we're in a different place in our company's growth. Clive alluded to it earlier, but I'm also particularly pleased that the numbers of On the Market agents who are now exclusive to On the Market, and as we will all know from every business vertical, exclusive content really is key in driving consumer brand awareness and driving serious traffic to the site. And this is all around focusing on these serious property seekers. So I thought I might just give an update on these 4 pillars of our strategy, what we pledged we would do and why, what we've delivered, and then what's coming next if we've got time. And I'll start with the portal, the first pillar. OnTheMarket.com will always remain our core business, but we said that we would enhance our suite of products and functionality, focusing on serious property seekers and giving agents new ways to engage with them. And I believe that we've delivered exactly that. We've developed a new suite of tools and products and functionality to our site that encourages serious property seekers to engage with agents. And we've also developed a number of products to really help agents win new instructions and new valuations into the marketplace. And we've developed these products that you can see on the screen. Ask the Agents and Reserve Buyers List, for example, are ways to encourage consumers to contact agents about properties that aren't even available yet, but may come available in the future. Sold Nearby helps to demonstrate social proof to a local area that there is an agent who is selling properties like the ones that they are looking for. And probably our biggest success was the automated valuation model, which generates an algorithmic-based estimate of a property's value to a potential consumer, but then prompts them to be able to get a physical valuation with a real local estate agent. That's been very successful for us. What's next? Well, it's a small box in the bottom right describing what is a huge piece for us. We are in the process of devising an entire new website featuring new UX, new UI, new customer journeys, whole focus on that interaction between serious property seekers and the agents and house builders who list on that site. And we are aiming to get that revision launched by the end of this calendar year. Clive touched on this earlier, but we already have a very key USP, which is our new and exclusive proposition. And we are very grateful to agents who choose to support us with this, because that means that On the Market can feature thousands of new properties every month, 24 hours or more. Sometimes it's 48, sometimes 72 hours or more before Rightmove or Zoopla. And we're obviously appreciative of this, but we've done a bit of consumer research over the last few months. And we believe as a management team, there's even more opportunity to tap into those serious property seekers. So over the course of the next few months, we're going to go through a process of refreshing and rebranding that proposition to really demonstrate to serious property seekers that they must visit our site first. And if they want to see properties before they are live on the other sites, then they need to come to On the Market. Clive alluded to this earlier, but we've shown significant growth in our new homes business, but we believe there's even more opportunity with the next tier down of new home builders. We're fortunate and we're very grateful to have many of the major PLCs, house builders on the site. You can see their logos below, but actually we believe there's just as much opportunity from the next tier down, the SME space, because they are the types of businesses that don't benefit from the huge infrastructures that the PLCs have. And that way we can develop products and services to support them in marketing, social media, press and PR campaigns, data and market intelligence work. And we believe there's significant opportunity in that area of growth too. As Clive mentioned, also we completed on our acquisition of Glanty, which is a software house, and we completed on that acquisition in the end of May. And this really enables us to develop our own end-to-end CRM, customer relationship management platform. And we are working very closely with Glanty in order to be able to deliver that. Glanty already have a software product called TechLet, and TechLet is an automated lettings workflow product. And we're looking to take all the great things about TechLet, the automation of the workflow, and convert them into the sales piece as well, to develop this real end-to-end CRM for our sales and lettings agents. And we will be going to market with those in the future. But also there's another opportunity, and the opportunity is around the whole property ecosystem. There are many things that happen in and around this space that aren't just involving the transaction, many things that happen before, during and after a sale or let, and we believe there's significant opportunity. And as such, we are building an estate agent and house builder marketplace, an opportunity for them to log on to the back end of our site, which is called OTM Expert, and then they can look to access different products and services around other parts of the ecosystem, with a view that this is all about helping our customers generate revenue for themselves. And in addition, of course, there may be some revenue generation for us via the API partnerships. And one of the most exciting things we've done in the software space is to develop our own commercial partnerships. This was a direct result of the feedback that we got from our agent customers, who said, there's lots of products out there. There's actually 3 or 4 that we really like. Why don't we just integrate with them and use them and utilize them via commercial partnership? So we've done exactly that. And this has been incredibly successful for us, excuse me, because we've built on these relationships with Canopy, Reach and Spriff, which you can see on the screen now. These are about 4 or 5 months into their relationship now. And we're now actually starting to build exclusive products that are only available to On the Market members via these commercial partnerships. But of course, I'm always looking for new commercial partnerships to bolt on. And in the last couple of weeks, we're pleased to announce relationships with both Coolwell and Auto Enhance. Coolwell is a really interesting tool that puts a consumer who's thinking of selling in direct contact with an agent in real time as soon as they've booked a valuation on the site. So as soon as a valuation has come in from a consumer that says, I would like an agent to call me to visit and to provide me with an up-to-date valuation, there's an automated call that puts the two in touch. That's real first mover advantage, giving our agent members a real advantage over the competition. And therefore, I think this is a really good addition to our suite of products and services that we're providing. And then last but not least, we've arranged a relationship with AutoEnhance.ai. That is an artificial intelligence tool that enhances the images that the agents load up to the site, changes in brightness, color, tone, just to make the site look more visually appealing. And we've said when we rolled out this new strategy that we want to make our site best in class. We want to make our site look, feel and sound the best of all the major portals. And this relationship will go some way to achieving this. Moving on to data and market intelligence. One of the things our agents were telling us is that they need access to more data. There is a whole world of data out there that wasn't around when I was an agent a few years ago, but now there's so much information available. And our agents were asking us, could you provide something that really is best in class to help me win instructions, to help me get valuations, to help me engage with the consumer? And so we've delivered exactly that. We've delivered what we consider to be the best-in-class market appraisal guide, which is a research tool and a data tool and a document that our agent members can take on valuations to show that they are experts in their local area, with every sold price, every property that has been on the market previously, every historic valuation, all of the data that they need to give a really accurate price to their potential client. And another thing that was really important to us is that we wanted to have a share of voice, or a much better share of voice, in the mainstream media. There are so many market indices available, and every month, if you look at the broadsheet press and you look at the digital press as well, you'll see lots of commentary around various indices. And I said very clearly early on, we've got to have our share of that. We're more than a challenger portal now. We are a serious contender in this space, and as such, we should have that share of voice. So I'm delighted to say that we've launched our own property sentiment index, which crucially focuses on the sentiment of consumers, how they feel about the transaction process, how confident they are that they will find a property or sell a property or get a mortgage within a particular framework of time. And this has had some really good traction with the mainstream media, both broadsheet, tabloid and digital. And we're really pleased that that's going to be continuing. In the future, we want to have more information for consumers as well, because we believe there's significant opportunity for consumers to be provided with more information at original point of search as well. I'm lucky enough to sit on one of the MHCLG, the Minister for Housing, Communities and Local Government boards. And on those boards, they are constantly focusing against more transparency in the property market, reducing transaction times, really giving more information up front. And we believe as a portal, we have a moral obligation, if anything else, to provide more data. And we're going to be working on that in the future as well. And moving on to our fourth pillar, communications and marketing tools. Delighted to have our growing relationship with Reach PLC, who are, as you all probably know, the largest commercial news publisher in the UK. There's something like 40 million eyeballs they get on a daily basis. And we're using our relationship with Reach to really focus on local and hyper-local digital campaigns. Our agent members were telling us, it's all very well having big TV ads, but what's happening on my street? What's happening on my town? How can I get in touch with consumers in my very hyper-local area? And so our relationship with Reach enables us to do that. And of course, this has only been running a few months, but we've also been able to add significant numbers of page impressions to our site. And we've launched some newsletters that are localized into different regions. And we've got significant numbers of signups through that relationship too. And in the future, we'll be developing a communication center which further encourages consumers and agents to engage with each other in real time in the virtual world. And last but not least, we have a brand refresh project that we are planning to roll out by the end of calendar year, but also a new TV advert creative that will be ready at the same time. So just as a brief summary, we've had a really good start to the year. I'm ever thankful to the hard work that the management team, but particularly my individual staff, have put in over the last few months. We've gone through a period of unprecedented change, but also unprecedented growth. And we're even more excited about the future because we believe there's lots more to come. The demand for UK residential properties has remained high, of course, but the group has performed very strongly in this first half. We've got this loyal advertiser base, and our strong financial position, as Clive alluded to earlier, gives us a perfect platform to deliver on this new strategy. And over the next half, we're going to focus on continuing to demonstrate the value that we provide to our agent and house builder customers. Our brand refresh, our new website, our increase in the levels of products and functionality to the site will also help to show this value, but also attract new consumers too. Consumers who are serious about their property search, serious property seeking people, and they're the people that we're going to be targeting. And we're working on that with other partners, both commercial partners and also in terms of our own internal development work to deliver on that. And we're also evolving our ESG strategy over time. We think this is the perfect time to do it. So we're currently in consultation with a number of third-party providers and really hope to evolve our ESG strategy over the coming months. So just to close, we have demonstrated that we are more than just a portal. We are no longer a challenger. We are a business of scale. We have strong agent support and fundamental agent support in terms of our ownership structure as well. And because we've got strong engagement from consumers as well, we believe as a management team that we have incredibly strong foundations in order to be able to execute the 4 pillars strategy. And all of those things are held within these positive market dynamics of the UK property market as it is. So I'll just say a very brief thank you for your time. I really appreciate it. Thank you for listening. You can follow us on any of the channels that are on your screen now. I also have my own personal channels if you wish to do the same. We can be contacted on any of these, or indeed via any other formal contact channels, or by email if you require. So now I'll say thank you very much. Thanks for your time, and I will hand over to Q&A.
Thank you, Jason. Clive, thank you so much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard, and we'll notify you when they're ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we'll redirect you in order that really you can provide your thoughts and expectations back to the company. Clive, Jason, I haven't given you a long while to look at the Q&A, but we did receive a number of pre-submitted questions, and perhaps I could just start off with a couple of those before addressing those that have come in the live meeting. The first one is as follows, and it relates to quoted income per agent. Can you explain how this is calculated? Does this include all agents, including those on a free tariff, or just those who are fee paying?
Yep, shall I take that one? So yes, it does include all agents. In fact, we obviously split it by agency and new homes. In the total, if you're looking at total advertisers, what you do is you look at agents by way of branches. So they tend to advertise their stock in branches. So one agent firm may have many branches, but you count each individual branch that's listed is one advertiser. And for new homes, they advertise by way of development rather than through a branch. So each development, of which again, some of the big new homes developers will obviously have a lot of developments live at any point in time. So what we do is we add up the total of the branches listing and the developments listing, and that is our advertiser number that we then divide the revenue by. So yes, absolutely, if there are agency branches on free contracts, they're still listing, they're still in the advertiser number, they're not contributing to the revenue, and that would lower the ARPA that we would be disclosing. And so clearly, as we talked earlier, as we've moved people off free contracts onto paying contracts, that is part of the reason you're seeing that growth in our ARPA.
Okay, perfect. Thank you very much indeed. And perhaps one final pre-submitted question, which is when a new agency signs up, I believe they're given a free trial period. What percentage are then signing up as fee-paying customers after this?
I'll pick that one up. So we only really started, as you'll have seen from the presentation, aggressively working on those conversions a few months ago. So it's too early to see over a 12-month cycle how that will look. But we know that over a third of agents convert to fee-paying contracts straight away after the initial trial period. And we'll have to see. Time will tell how many will additionally convert once we follow up and continue to follow up. But the early results have been really encouraging for us, and shows, I think, it's a differentiation perspective, really, because what we're trying to do and what we're trying to deliver from this strategy is show that we're more than just a portal, show that there's increased value to that product offering. So it's not just about the portal offering value, it's all of the associated services that they are now getting as part of their membership. So I think that's where the real interesting piece will start to pan out over the next 12-month cycle.
That's great. Thank you very much indeed. Well, look, if I could please ask you just to open the live questions that have come in, and thank you firstly to all those investors that have submitted questions both ahead of today's event and during the presentation. But perhaps if I could be so bold, if I could hand back to you, if you could read out the questions and give a response, and then I'll pick up from you at the end.
No problem at all. Thank you very much. I'll just go through these. We probably won't get time to do them all, but we'll do as many as we can. So Nick J, thank you, Nick, for your question. What incentives do you give agents for exclusivity to your platform, and how do you track that they do what they say? Clive, if you want to pick up the incentives,
Yep.
And I'll cover how we check.
Yep, absolutely. So we do offer actually some incentives in a number of ways. They might get a discounted rate for being exclusive. We actually offer shares to new shareholders. They may get a higher allocation for that as well. So there are incentives. I would say though that ultimately for an agent, the key is that they have an effective marketing strategy. And at that point, they want it to be value for money and pay as little as possible. So actually, as long as we are delivering what they need in our advertising service for them, why wouldn't they, if they can make it work and be exclusive with us, why would they go elsewhere and pay more fees if the service is sufficient from us? So key for us is, incentives are always helpful and lots of people do those things. But at the end of the day, if we provide the quality of service they need, we can help them keep their overall marketing costs down.
Thanks, Clive. I'll just answer the second point very briefly for time reasons only, because there's a lot of questions to get through. Yes, we do track those. For us to be able to say that we have new and exclusive properties that are listed 24 hours or more before Rightmove or Zoopla, there has to be a complete back-end check of all of those listings. So obviously that the same thing applies to true exclusive. There's an automated system that every day is checking where the listings appear in comparison to others. And if they're deemed not to be exclusive or even new and exclusive, then they're automatically removed from the site. So hopefully that answers your question. The next question was from Simon C. Thank you, Simon, for your question. How do you look to differentiate from the other portals when engaging with agents? Have agents been focused on reducing their cost, and what impacts have you seen? So I'll pick this one up, and very bluntly and candidly, we've been listening to them. That's how we differentiate. So we've been going through that process of engagement, listening to what they want and need from us. And as I said in the presentation, many of the things that have come out of those conversations, we've actually now started or arranged commercial partnerships in order to be able to facilitate. Every single time we have one of those town hall sessions where we get 20, 30, 40 agents in a room together, whilst we never record the calls, we always make a note of all the consistent themes. And when people say they want something out of us, they want a different type of functionality, we're noting all of that down. And at the end of those review sessions, we collate the list. And when the list says, for example, as it did, 35% of all of our responders wanted a better market appraisal guide to take on valuations, we delivered it. So I think the key answer to your question is that we differentiate when we listen and engage with agents, because we ask them what we want, and then we actually deliver on what they're asking for. You had your second point was about agents focused on reducing their costs and what impacts have you seen? Well, if you think about the value proposition, we are incredible value for money when compared with some of the other market leaders. We offer a value proposition that is generating increasing number of leads to our agent members, but increasing value in terms of other services and products as well. So we believe we've already got a significantly differentiated proposition now that's markedly different from the others. And really, we are now, for the first time, being those people who are first responders. We are moving first with innovation. We're moving first with commercial partnership. We're moving first with understanding and engaging with the consumer. And we're moving first in terms of serious property seekers. So I believe that puts a very solid and powerful proposition to our agent members. Hopefully that's answered your question. Moving on to the next question, Michael D. Michael, thank you very much for your question. Do you see areas of future growth driven by acquisitions? If so, any areas of interest? Clive, would you like to pick one up?
I mean, I think it's possible, but I think probably more likely or more frequent will be but either in-house developments or adding to our suite of services and offerings through commercial partnerships in the same way that we've gone through some of those that we've done in the presentation. M&A, as I say, always possible, but clearly we'd need to see something that was both interesting and and complementary to our products, but also importantly value for money for our shareholders. So a lot of the evolving innovative sort of prop tech things now at the moment, that latter point can be quite challenging versus the value for money we can create if we commit in-house development resources to that. So I don't rule it out, but I don't think you should see us as just going growth through mad M&A activity. I think if there's something out there, we could consider that, but otherwise I think we've got a lot of in-house ability to grow organically.
Thank you, Clive. Let's move on. So Stephen B, thank you, Stephen, for your question. How does the relationship with Canopy work? Are they not more of a competitor in the letting space rather than complementary? Are they a potential acquisition candidate? Well, I'll answer the first bit. They're not a competitor, Stephen, because their platform really helps to provide what we call a sort of rent passport. So if you think about how a mortgage calculator works. So when someone's thinking of getting a mortgage, they go on to a particular site, they'll type in their summary details, the value that they're looking up to, what their income is, and a couple of other questions, and it will put out an affordability metric. That's essentially what Canopy provide. They provide an affordability judgment so that we can provide more of a quality lead to our agent members, so that they're already seeing when that lead comes through via the Canopy platform, almost a pre-qualification, some know your customer anti-money laundering checks, some affordability checks, and there's some other elements of automation too. So no, I don't see them personally as a competitor. I see them very much as a complementary business, because the things that the agents have told me is that they're looking for more quality leads, particularly in this busiest of busy markets. When a listing goes live, they are inundated with the number of leads that they get, both for sales and for lettings. And agents were saying to us, we want a way to assess that quality and really work out which are the most motivated of buyers and tenants, and also which of those are in the best position. I think this delivers on that by helping our agents to really sort through those. There's another knock on with Canopy as well, and that is that the Canopy platform, through our exclusive commercial partnership, allows free full tenant referencing for a 12-month period. And that means that our agents get to benefit from a cost perspective, saving hundreds and hundreds of pounds potentially a month by getting free referencing via Canopy. So I actually think it's complementary rather than conflicting. Your point on acquisition, I'll refer you to Clive's messages and comments a few moments ago. We're always on the lookout for things, but they have to be something pretty special in this space in order for it to be able to move forward. So thank you for your question. And the next question from Sasha K. Thank you, Sasha. When do you expect UK instructions to pick up again? That's a good one. And why so weak right now? Any risk that agents go busy if conditions don't improve soon? I mean, I think you meant any risk that agents go bust if conditions don't improve soon. I think that's the question. Okay, so when do we see instructions starting to pick up again? Look, we are in the busiest sales market since records began. I said a couple of months ago in our On the Market Property Sentiment Index that I actually believe it's the best time to sell a property in 2 decades. And I stand by that because, as Sasha quite rightly say, there are very, very low numbers of properties on the market, both for sale and, interestingly, for rent too. Normally, as an ex-agent, when I see lots of stock for sales, I see very little for lettings and vice versa. But actually, we're in a market now where there's very little stock on both sides. And I would have thought, and certainly the press would have thought, that after the end of the stamp duty holiday, that there would be a slight change in the market, that the growth in house prices would start to come off, that there would be much more challenging times, there wouldn't be the number of buyers. But we haven't seen that at all. And actually, when I look at our last survey, 81% of sellers were still confident that they would sell their home within the next 3 months. And 74% of buyers were confident they would purchase a property within the next 3 months. So there's no change to the sentiment of either buyers or sellers. And that means that we are still in those supply and demand economic fundamentals where there's lots of demand, sometimes pent up demand. The mortgage market's obviously very competitive too, but very little supply. So the reason why there hasn't been any stock, or it appears to be very little stock, is because things are selling very, very quickly. 55% of our properties for sale go under offer within 30 days at the moment. There's a proportion that don't, but that shows that the market really is buoyant and that that stock level is struggling to increase. One glimmer of hope for those who are looking for a property but can't find one, we've started to see over the last 3 weeks instructions starting to tick up. That's been the first time we've seen that since May this year. So potentially over the next 3 to 6 months, we'll start to see those instruction levels increase. A quick answer to the second point of your question, is there any risk to agents if things don't improve soon? Well, actually, a lot of agents now are supported in a way that's very different from early 2000s or even 2010, 2015. A lot of agents have lettings portfolios that are based on recurring revenue. So a lettings portfolio will generate significant revenue on a month-to-month basis based on those fees. And then there's incremental transactional revenue to come from that. But of course, as I alluded to earlier in the presentation, there are additional revenue streams that can be generated too. So actually, we've seen the opposite being the case. There's lots of reports out that there are more new agency branches now than there were at this time last year. Depending on which report you see, it could be up to 500 new estate agency branches have started business since this time last year. So we think there's actually just as much opportunity for agents, good agents, to build their market share. And of course, when those new instructions start to rise, we'll see more sell through and more let through as well. Hopefully that answers your question, Sasha.
Jason, that's a complete house, sir. You've taken every question that's come through from investors. So Clive, Jason, thank you so much for your time, and also to the investors for submitting the questions. I know investor feedback is particularly important to you guys, and I'll shortly redirect all the callers, all the holders on the call to provide you with their thoughts and expectations. But perhaps, Jason, I could just ask you for a few closing comments, really just to wrap up with. That'd be great.
Yes, of course. Well, thank you, first of all, ladies and gentlemen, for your time. It's a real pleasure to be presenting to you either for the first time or presenting to you for a second time if you're already following us. We've been delighted with the operational performance of the last period. We're really pleased about the growth in the business. We're pleased about the way we are starting to differentiate our business from the other major players in this space. We're now stepping out of the shadows of those market leaders. We're starting to forge our own path and own our own lane and really be seen as a business that is growing, differentiating, and really starting to deliver increased value for our customers, which is our agents and house builders. And we're very pleased about the progress that we're making. I'm particularly thankful to all of the team who've worked so hard over this period, and particularly thank Clive also. But what we're even more excited about is the future. And now we have the fundamentals of these core 4 pillars in place. We think we're perfectly positioned for growth going forward. So thank you very much for your time, and I do hope to see you all again very soon.
Jason, Clive, thank you once again for updating investors this evening. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of On The Market PLC, we'd like to thank you very much for your time this evening. That concludes today's presentation. Good evening to you all.